Squad, welcome back. And we are here with Monday's trading. Hopping straight into it. I know I said I wasn't going to trade, but I did see a setup at a level I was looking at. Let me just re-annotate the chart. Sorry, let me annotate the chart to what I was looking for so I could walk you all through this trade. I actually was recording when I was live in it, but again, I didn't want a long video. So I said I would just make some notes and stuff on the chat, and I would enter. I mean, when I make the video, I would just show everybody what's this like price action not going on here. So anyways, let me just show you all today's trade. I actually was in that GU trade. I ended up closing it, so I will explain all of that. So you see the entries here, I was able to pull out 180, 181, 126. Then I end up going long again in euro, but I realized that wasn't favorable. So I end up closing the trade early. So that was this 128 here. So that basically I end up taking out this and touching into this profit, but we still up for the week so far 170 something. And I was able to close better on the $10,000 account. So market opened very much real close to mind you, don't get carried away with that price leg. If it's one thing, this momentum move here, I don't care about that. Even though it going up to the level I was looking at when I was in. Let me explain this first. I'm gonna start to get my things in order. So the initial draw I was looking at was the 15-minute draw, because they had a 1 hour favored gap underneath that draw, which is this here. So my whole premise for this setup was on the heels of last week was a very interesting week, I would say, right? But when we opened very close this week to last week open. I kept it on the chart, so I know this is a retracement, was a discount. And this week open. When we open, we capped 30 pips down, right? 30 pips down, because I wanted to see this whole support. But if we gap underneath it, that one time tell me that, okay, they're going on run sell side. And the most reasonable obvious swing low for sell side was this 50-minute propulsion block, bullish propulsion block, and the gap underneath is a 50-minute swing low as well. So that was the draw I was waiting for. So I reached back home late last night. I think I actually reached back home this morning. And I reached back home like 1 o'clock this morning. And I was tired. So I ended up dropping to sleep again, as per usual. And I woke up at 4:55 my time. Because I supposed to have the time where I enter here. Right, actually it was 4:35. Sorry. And it was a 5. I know it was 4 and I had a 5 at the end. So basically, 4:36 is when I entered this trade. And I was real tired, but again, I had the levels on the screen already, so I knew what was going on. I actually entered, I'm up on the executions, entered somewhere around here, inside of this black candle here, around this region here, I believe. For the executions, drop to the lower time frame. Right, so I entered on, this is 3 minutes. Let me go to the 1 minute. So I can get the full, so I can get the exact candle itself. Right, so it was on this candle. Now, remember, you wait for the draw, which is this whole price leg coming down from quite up here. You wait for the draw, so this is the drawing liquidity. You don't enter as it hits. Remember, I said that back in the days, how I used to get catch. You wait for the draw to happen, which is all of this here. You wait for a swing low on the 1, then you wait for a structure, which is a swing high. So we have our intermediate and fractal high and low 1 minute structure. Then when this coming down here, what I'm going to see is this test, this structure. So from the time I see this come down to the midpoint, which would be, I would say, about here, right around here, when I see this come all the way down here, I say, okay, I don't really trust this structure. Even I didn't know, I can say in hindsight, but I've proven in the past already how I look at the structure to know if it will hold. This didn't hold for me because two reasons why. The initial draw price trade up quick. We have a wick. Not much trading would have been able to happen here. Because we have a wick and then we have a body, a 1 minute body, and then we start going up. So I wanted to see it retest it. These full bodies here show me, okay, this level is a temporary support. But I find price, not, if price really wanted to go up, it would have, this leg here, this price action on the right here would have go higher and burst through this premium here, fair value gap, for this fractal, right? So when I see it respecting, okay, I say, okay, this level now, there's a small consolidation here, right? This is a manipulation leg here, right? So because remember, we wait for the draw, which is the yellow line. Let me just tick in the yellow line. We wait for the draw. And then after the draw, we anticipate about 10 to 15, maybe 20 pips under, right? So this would only give us 7, right? We're looking for 10. At the 10 pip mark, we don't have any bullishness yet. We're looking for 15 pip. Right. So in here, we're waiting for a swing low. The first real swing low that form is this one here. Right? Let me just draw this down. 10 to 20 pip, right? Underneath our point of interest. Our draw, whether it be buy side or sell side. So now, the same thing that happened here, see how it failed here, with the waiting for the draw, the swing low, the swing high. So now we're waiting for a swing low and a swing high. So this little fractal of price in here between this low and this high, I want to see if this fair value gap inside here would hold. So I want to be patient and wait. The third candle that formed the swing high here burst through it one time, momentum. So it's already given you didn't have to wait long. You see, okay, this failed. So now in your head, at the time, this would have been what, 50, about, let's just say 15 pips here, 16 pips here. You're still waiting for 20 pips under. So 20 pips right here. When this swing low fail, and it trade on, boom, you have to 20 pips. So you're already just looking now for displacement. You want to get a weak candle to people to still sell on weakness because they engineer some liquidity on the swing high. So the anchor point will be this high and this low. When you reach here now and you see this displacement in here, boom, boom, just come like, if you notice that second candle, this engulfing candle here, barely have a wick above it. So that's real bullishness coming to the market. So in here, I want to be a buyer. When price open and trade down into here, I'd buy this black candle one time. I'd buy it one time and I'd live with the results. Because my draw, the gap filled, 1 hour favor the gap. Two structures fail on the third one, swing low, anticipating the 20 pip move down. I'd buy here with my normal 20 pip stop loss, and we would have rally, but I was not up for this leg. So that's why I waited for this swing low here, right? And this swing high. Notice the difference. Notice the difference. Look at the midway point between this high and this high and this low. The midway point would be about here, right? Watch this low and this high. Look at the midway point. Right on the fact that it's on this line, not important, but it just so happened that the line given my exact midway point. Watch how the equilibrium being respected here. Alright? That means this fair value gap being respected. Now, obviously, we want to see it trade into the fair value gap and then the fair value gap hold. But I already knew from this leg here, my stop was going right underneath this. So if I'm wrong, I want to come out here. I don't even think this was the 20 pips. That was not 20 pips. It wasn't 20 pips. But I entered here. That was like 10 pips. Well, I paid at 15 pips. Because if I had 13 pips here, but that's what I just paid at the 15 pips. Because when I have the 20 pips stop loss, it's really 15 pips I want to get at. Anyhow, now, you know? So I put it at 15 pips here. This is my entry here. So I had drawn on my charts. I circled this low, this swing low as a draw for price to want to trade into before it started to go up here. And if you think that is not the case, and some wicks. Notice this fair value gap in here being respected. this order block here, it went down to half, right? And then it shoot off. I took my first partial above the 5-minute high, I believe it was. Well, the move leg that's drive prices down. I took my partial up here, and what I realized was, okay, this fair value gap, from the time I noticed from this swing low here and this high, when it reached halfway into this fair value gap, I didn't even have to draw it out. I kept this one in here because that was a 5 or 3 minute fair value gap. When I realized since it reached halfway here, it's kind of failed, I just closed the trade here because I didn't want to. It's Monday, bank holiday, consolidation. It didn't take out any highs before it when it gapped down because of the big gap. I don't know, it is not high probability for what we look for, especially how I enter late. Because if I had got in with my normal entry, if I was up in here, where I get a way better partial, and if I had moved my stop underneath here, I'd get stopped out. You know? So Monday traded, and also too, I saw this fair value gap fail, and price came all the way back down here. I was like, nah, I don't wanna sit through this. But I just Mondays are there, and I knew I wasn't really going to trade today. Let me just go home with the money that I had as before I lose the 125 when I enter on the run, close it off one time. I noticed, okay, these two PDRAs here fail. This low to this high, this PDRA fail. So that means they were looking at this low and this high. That one looked like it was failing too. Here. And from the time it come this low, I know, okay, this going to fail. Because when it trade back up, the likelihood of it going over this was not high. Because this didn't break the 1 hour fair value gap. This whole range of that gray shaded area, we didn't break it here and we didn't break it here. So that just tell me, okay, this is either it going to consolidate or it going to come down before it give me this move for New York. Because I was waiting for this premium fair value gap to trade into here. If this was going to go up higher, that's why I took a partial here, and I actually had my TP here. My TP, I moved my TP down. I think actually that was the 40 pips, no? If I had gained here. Oh no, it was half the move. I put my TP here, right? Well, at least on these 10,000, I get a pyramid in. So my two TPs was here, but before it had went to my TP, it would have hit my stop loss because I had moved my stop loss underneath here because I entered late and it was rather sloppy day. Well, still a sloppy day. I want to say sloppy day, I mean sloppy day for me. With well, you all know how I look at the market and stuff already. I like fluent, dynamic movement and stuff, and I didn't favor the conditions, so I closed the trade. So the fact that I closed the trade, I glad with it. I glad with that I closed the trade. I glad that I was able to take a good partial here, and I was glad that I was able to see that the PDRA I was looking at failed, and this subsequently came all the way here. I mean, you could sit through this if you're cool enough, but I don't want to be quite up here and have to sit back through all of this. And remember, we still bearish. We haven't got the confirmation as yet that the dollar index going and go lower. Right now we consolidating. When I entered the trade initially, when I noticed, because I had this drawn here, remember I told you all, I'm not going to enter a trade until I know the dollar index doing. When I saw the dollar index trade up into here, when I was when London had now open, I was like, okay, cool. Once dollar index give me a rejection here at 3 o'clock, I'm gonna enter, but I was asleep. I dropped asleep. When I woke up and I saw the fair value gap here on the premium was respected, at the time, that is what my catalyst for my entry was, because that means that premium fair value gap would have been respected and reject price, so the discounted fair value gap on foreign would have support price. So that was the trade idea. I'm not concerned with this here. I actually like this. What's this range? What's this tight range Monday in here? Right? Monday in a 52 pip, a 53 pip range high to low, and I trying to get 40 pips in that condition. It's not highly favorable. So It may want to run up into there, which that way the draw is on the upside, but I don't want to be in this condition here, this market condition. You know? Let me entry for the euro. The entry for the euro, same thing. Actually, I had entered here. My stop was here. But when I saw the PDRA is failing, the entry on euro was simply based on the fact that I saw pound was going higher, and I entered on euro. But I was like, nah. You know, I was on a 1 minute fractal in here, and I noticed it fail one time. When I saw this low here, after this initial draw underneath here, I saw the bodies. We had some body that the candle respecting it. So I said, okay, good. When it came back down, I said, okay, let me see if we have any willingness to go higher. And when I bought, immediately after I bought, I get some movement up. I don't know why I done this. Sorry, I'm watching the wrong thing. When I bought in here, when this had open and traded down, and I bought here, we get the move up. And then when I saw this came back down here, I was like, alright, this is looking like a gun feel. And I just ended up closing the trade. Because I didn't want to have to sit through all of this. Well, subsequently get to here, but this is just manipulation in my book. You know? And I don't want to be in this whole choppiness here. I don't want to be in choppiness. So we had the consolidation, we had the manipulation leg into our draw, which was over here. We waited 20 pips lower. Well, I was sleeping. But we would have waited 20 pips lower, which would have given us this down here. We'd have entered down here. But we end up ending up here. I should have closed the whole trade here. But again, it traded up, and I say, alright, if this break this fair value gap, I'm leaving it, let it go, and I'll take one second partial here. You see, you understand why I end up just closing it entirely here and not here? Hindsight will tell you you should have closed it here. But this move was looking for here, I thought it would have happened here. But the fact that we come to the end of the kill zone, and at the kill zone end at the high of the 1 hour fair value gap, and it didn't give me that leg up, I was like, alright, that definitely won't come down. Maybe for New York, which would have been this price action inside of here, I would be able to get this move, but it's Monday. I'm definitely not trying to just get these small legs. So I was like, yeah, see what? So yeah, that was the analysis I wanted to just, discuss with you all. The catalyst was because of this little leg of price in here. What gave me the reason that actually was this one here. This gap here was respected. So I was like, okay, this demand zone strong. I was looking to expect this zone to trade up into here, like we do it for New York. But when it failed, I said, okay, took a pass at the high, didn't want to go up, close that, and that was it. I want to see how did it go. I look like it go and draw and go up here, but we'll see. So I just wanted to make that quick video just to show you guys. Stick when you find your entry model and everything. Again, focus on price. Focus on the price. Is it supporting your idea? So when you look at it like that, you will be able to close your trade early. Unless you want to sit down through drawdown, not drawdown, but unrealized profit. Well, in this case, it'll be drawdown. But if you get your entry when you want to get, if you don't mind sitting down for that day where your big profits shrink and then go back up, that is cool. That's alright. But focus on price. Don't focus on how much money you're up by, how much money you're down by. Focus on price, and that will tell you everything. So you will see if your trade idea is still being supported, and any breakdown in price, you will know what to do with it. Whether you want to hold it close trade, if you want to add on more, up to you. If you probably want to open that next trade and go short with it, it's up to you. But we see that I didn't want to sit down through this. If I had got my entry underneath here, I don't mind, honestly. If I had got the entry here at a partial here, move up to break even, and actually no, I'm not even going to lie to tell you. If I get my entry here, I'd take over the majority of the trade up here anyhow, and my stop loss would have been up at break even. So I would have
at break even or maybe at this high here. So more than like, not more than likely, I would have been stopped out. So either way, I wouldn't have been in here. You know. So that is it. So hope this video was insightful. I hope all the videos, whoever listening, able to see the narrative and the idea behind these trades and the understanding of the not just the lingo but the understanding what the lingo mean. Again, this was the last week open, right? So all this will be discount. Now we are above last week open. We're going over today's open. We get a rejection from last week open. We trade back up into it. The draw is up here, right? We're now reaching back to the weekly. This week open here, we trading up into it, right? So now we're in a premium for this week, right? And it's a bank holiday. So I just seen today is a day where liquidity just going to be built. And I expecting some bullishness this week, don't get me wrong. But these levels here that drawn off gives you a very good detailed idea of what if we overbought, if we oversold, and if we had premium level, if we had discount level, and all of those good stuff. So yeah. as always, end of the videos, keep trading, keep practicing, keep the idea of how much price went beyond your trade after your TP and how much price went beyond your trade after your entry. Meaning if it get close to your stop loss, if you happen to get stopped out, how far it went down, so that way you can work on your entry and you can work on your exits in terms of partials for profits, or even taking partials and loss so you don't suffer your full loss. Because that's also, well, that's part of trade management. Entries, partials for profits and loss is trade management. The risk management part would have been before you even press the button. But the managing our trades is the when to take profits, when to enter, when to take profits, and when to cut your losses, when to add on to, when to pyramid in. So I will end this video here and I will catch you guys back for tomorrow's trading. So enjoy.